So now let's move on to key number 2. Key number 2, you must have your own currency or contract. So we need to follow exactly what the Federal Reserve is doing, what the banks are doing, what the credit card companies are doing. We need to follow what they're doing in order to be able to capture all this money. So think about it. Would you rather win $1 million, or would you rather have $1 million contract or $1 million in contracts? Well, if you win $1 million, plan on the government taking about 40% of it. But here's the thing. If you have $1 million contract and only a portion of these contracts are exchanged into dollar bills, what are you taxed on? Now we're getting into accounting, but most small businesses do cash instead of accrual. Because of that, you only pay taxes on the cash that comes out of those contracts. And the contracts are earning money. Let's say that you're only pulling out of $1 million, that you're only, that the monthly payments coming in are $1,000 a month. Well, you're probably expensing that $1,000, and the $1 million, let's say that it's growing by $1,000 a month. That means that it will continue to churn and keep generating that interest, and at the same time you're expensing it out, but you're paying nothing in taxes. And that's how the rich do it. We need to have you follow these same principles so that you can reap the same benefit as well. So you must have your own currency. The current currency and transaction systems are to allow just enough money to remain local for you to be able to survive. And that deals with taxation and credit cards. Think about it. If they can pull it from your city, if they can pull that money from your city and make it so that there's just a little bit in there and you keep building and that money keeps flowing away, they just make a ton more money. And that's kind of the goal. If they just leave enough to keep you where you're at so that you'll keep feeding them, then that's like perfect for them. But if you switch the table on them and you start becoming the bank, you start becoming the credit card company, you start becoming the collection agency, and you use that as a tax haven, you end up stopping that happening, and all of a sudden the dam is building in your business and in your community. So you want to work just like they are on a small scale and reap the benefits that they are. So you dam up the exchange of currency becoming taxable. You are able to build wealth bigger and faster, and you are able to control its outgoing flow. It's absolutely amazing how much money flows out of communities from small businesses. Most of the time we don't think of that. It's kind of out of sight, out of mind. And the credit card companies and the lenders do not want you to see how much money they're making off of nothing. They don't make anything. They don't produce anything. The key is you've got to make it so that your contracts are functioning just like a currency. So it all is back down to your contracts. And here's what's really interesting. If you look at it, the Federal Reserve or the government, or however you want to do it, if you look at it, you are actually establishing your own country. And because you're establishing your own country, which it could be you or the name of your business or whatever, you create these contracts, and those contracts are currency and they flow a specific way. With those contracts or your currency, you control its quantity, you control its circulation, you control its interest rates, the fluctuation of its interest rates, you control how much your customers have in your contracts. You also control the exchange to US currency so that you can control taxation, and you control its cost to produce it and use it. It's absolutely amazing how much money you can make off of it.